How's it going, guys? It's Dennis, and we're back with another video talking about QDTE and how this Roundhill ETF will be falling into my portfolio and how I'll be using in my portfolio for a new strategy I'm looking to run in the portfolio. A lot of words, a lot of portfolios over and over and over again being said again. But besides that, this is not a new strategy. This is not a new way to look at portfolios and look at dividends. I'm actually not stealing this idea, but I actually saw someone running this idea, and actually it's not the first time I've seen someone running this idea. But if you guys know who Paycheck to Portfolio is, he's been blowing up recently on the YouTubes. Paycheck to Portfolio, 5K subscribers already. You guys can see I've watched all his videos since he's been posting. 57K views on his very first video. So nice job from Paycheck to Portfolio. But pretty much what he does and what he talks about in his video is that he takes his paychecks, he puts it in his portfolio, and then he goes ahead and runs that over and over and over again for every single paycheck that he receives from his W-2. He puts into a portfolio, takes out margin, pays the bills he has to pay, and then the dividends that he receives are able to pay down that margin and also continue to grow his account further and further and further, because the distributions he receives from the dividends that he gets and the ETFs he owns is higher, of course, than the rate that he gets charged on his margin, and also beats inflation, is able to give him growth in the same time. So he could tell you all about it. You can look at his video as well to see what he does exactly. But the way I'm using QDTE is going to be similar, but a little bit scaled down, right? So I'm not going to be putting all my W-2 into QDTE just yet. I do have to build a little bit of margin space. And actually, before we even get more into the strategy, we can take a look at QDTE in my portfolio. I currently hold $10,549 worth of QDTE. It makes up roughly 14.94% of my portfolio, almost 15%. And I've been adding into this fund. We're sitting at 310 shares. I've actually recently added money into this fund. I've added $1,500 into this fund and continue to reinvest dividends into it. The reason being is for this exact reason, right? So I'm looking to currently add maybe from $500 to $1,000 into this fund every single month. From that, I'll then borrow off that $1,000 that I invest into QDT. And if I need to the full $1,000 amount, then I'll use it to pay any of my bills. Sometimes I won't need to use all the money to pay my bills. Sometimes I will. But the times when I don't need to use all the money to pay the bills, then I'll go ahead and reinvest that back into QDT or back into something safe like SPYI or JEPQ or GPIQ or SGOV, anything of that sort that's able to give me yield, but also keep my money somewhat safe, right? The reason why I'm picking QDTE over all the other funds and all the other things that exist like YMAX, YMAG, XDTE, RDTE, the new Yield Max funds that are similar to QDTE and XDTE like SDTY and QDTY. The reason I'm picking QDTE is because of the strategy they run and also their history. So if we look, they've paid $15.24 in the past year, right? That's their annual dividend yield so far for the past year. That's a 45.11% dividend yield, even after looking at their website of 35.4%, but that's based on the recent yield. But we can see that their average for the year is 45.11. They get distributions of 30, 17, 21, 23, 20. They get good distributions every single week. Of course, they fluctuate up and down, but as we see, $15.24. We look back at the year chart, it's lost $10.62 in value. Pretty much, we've gained $5 in value, technically, if you haven't sold or if you haven't distributed anywhere else. If you just reinvested back then, you've gained $5 in value because you were able to outpace the loss in value of QDT. So the QDT loss, the share value loss of $10.62, you made $15.24. But don't just listen to me. You could look at the charts as well. If we take a look at the charts and we take a look at total return, which is with dividends reinvested using Seeking Alpha, we can see that QDT for the year chart returned 10.05%, while S&P yielded us 10.08%. Of course, this is comparing QQQ run strategy compared to S&P. But the reason I'm comparing this is because most people compare everything to the S&P, right? Of course, QDT will perform worse than QQQ. If we actually go ahead and put that in really quick for us. If we look at QQQ and we go ahead and put that into the graph, we can see that QQQ was at 13.25% and QDT was at 10%, so it lagged behind by 3%. But like I said before, most people just buy S&P or VOO and chill, and usually that VO is similar to S&P, so we're going to be comparing to that. So 10.05% to 10.08% Let's go ahead and get rid of this so we don't get things mixed up. It trails S&P quite well, and this is with dividends reinvested. Now, what I'm planning to do and what I'm currently doing without even the W-2 form being put in is I'm taking 50% of QDTE, putting that into SPYI or JEPQ, depending on the month and the week and how I decide to trade it. Putting 50% of the dividend I earn weekly into JEPQ or SPYI, and the other 50% gets put back into the fund, right? So back into QDTE. That will half my return by half, right? So I'm taking half and putting it somewhere else. That means my return will be halved as well. So instead of a 10.05% return every year, I'll have a 5% return every year, right? So it'll lag behind the S&P, but also I'm putting money into a different fund, so I'm diversifying. And also technically, in my opinion, SPYI and JEPQ are a lot safer on the NAV erosion side and on the dividend side than QDTE. QDTE fluctuates in dividends. It also fluctuates in NAV. As we saw in the chart, it dropped quite hard. And it continues to drop because of NAV erosion and all that sorts. And of course, and SPYI is just better for when you're holding value and therefore creating margin buffer, which is very important when using a strategy like this. Now, when we compare this to other funds like XDTE, this is another fund from Roundhill, 7.25% compared to 10.08%, right? So lags behind by 3%. We saw this similar with QDTE to QQQ. We're using S&P, of course, because S&P, like we said before, is the best thing to go ahead and look over and compare to. So 7.25% to 10.08%. We take a look at YMAX. YMAX is also a competitor in this space, a weekly payer, 11.83% to 10.08%. And then we have YMAG at 15.08% and 10.08%. So YMAG and YMAX do beat QDTE, but why am I deciding to go with QDTE if they beat QDTE with YMAX being by 1.83%? And YMAG by almost 5%, or actually it is 5%, beating QDTE. Well, the reason why I'm choosing QDTE over YMAX and YMAG, of course, XDTE is simple. The yield is just better on the yearly chart. But why I'm choosing over YMAX and YMAG is because I just do not prefer the way they trade YMAX and YMAG. The way dividends are paid with YMAX and YMAG and the way the NAV is moved on YMAX and YMAG is based on the single stock ETFs, and it's based off those single stock underlyings, right? So with YMAGs, of course, YMAG 50% return, of course, that's based off the MAG 7. You're assuming that you believe that the MAG 7 will continue to trend upwards, and of course, S&P and QQQ are in cohesion with the MAG 7. The MAG 7 is in the S&P, in the QQQs. So it makes sense why they move so closely. But of course, YMAG will be beating QQQ and S&P because the MAG 7 is mostly the high movers of that total fund. And therefore, it makes sense why it would be 15% compared to 10%. Now, once again, the reason I'm not choosing YMAG and YMAX is because they invest in single stock ETFs and they receive their dividends from the dividends that they dividend ETFs that they invest to. So Group A has Tesla, GUI. Group B has AMZ and Apple. There's Group C with NVIDIA. Group D, or no, do they have NVIDIA? No. Group C, I'm pretty sure. Maybe it isn't. I think Group C is this week. I think at PLTY, right? Palantir and all that sorts. Then you have Group D that has AMD and all that sorts, right? So the reason I'm not investing into those because they're based off other yield max funds. So you have diversified yield max funds. The strategy QDTE uses is they run 0 DTE trades on the QQQ, right? So they do one trade in the morning, and that's it. They do that trade, they make their income, they either lose or they win, and then they close that position and they let it run throughout the night, right? It runs up throughout the night. They either go up when the market goes up or they go down when the market goes down. Then they run another one the next day and another one the next day. And the positions are not open overnight. Therefore, you're able to capture the upside on the overnight, as well as you're able to capture the dividends on the daily basis. Right? So that's why we have moments like this where QDTE outperforms S&P because they're able to capture the upside movements in the market as well as the dividends on the daily basis, right? As we know, on average, statistically speaking, the market moves mostly during the night or during closed markets rather than during market open, unless, of course, there's any big news that comes out like any Fed meetings or Trump speaks or anything of that sort. So that is why I'm choosing QDTE. Just a little bit more of my preference when it comes to, I prefer when it comes to their strategy that they run. I prefer what they're running it on. And the reason I'm choosing this over SDTY and QDTY and RDTY from YMAX ETFs is because the way they trade as well. So the strategy they trade. As of my knowledge, QDT only does one trade in the morning and they close it in the evening. Maybe they changed their strategy, but that's what I knew from before. That's the information I knew from before when they started and how they used to trade. Maybe they changed, maybe they didn't. I don't know. Now, with SDTY, QDTY, and RDTY, they've stated themselves actually recently on the Twitter space when they were speaking with Retiring on Dividends. The way they trade SDTY, QDTY, and RDTY is they trade multiple times a day. That is how they're able to get their higher yield, right? So we go ahead and take a look at, let's compare it to QDTY since we already have QDTE up here. If we compare it to QDTY, of course, we're not going to be able to get a great comparison here, but if we let's look at can we get a 6 months? 6 months will be, let's look at a 1 month scale. QDTY is able to outpace QDTE by roughly 1.5%, almost 2%. The reason being, of course, like I said, they trade multiple times a day, but when trading multiple times a day, you're taking multiple times of risk, right? That's not something I enjoy. I'm not so keen about that, about taking multiple trades a day. Like I said before, maybe QDT does the same thing and I'm just not aware of it. Maybe their strategy changed, but I know 100% because S&P, because YMAX ETF and their traders and their owners, I think it was Jay mentioned it. Jay was the one speaking in the spaces, and he mentioned that's the strategy they run. So that's confirmed. He's mentioned it. That's the strategy they run. They trade multiple times a day on the 0 DTEs. Also, QDT has been around for a while. And QDTE is just, and Roundhill is something I trust. It's been back tested, right? We could see it. It's been back tested for a year scale. If we look at 3 years, not so much. It started in 2024, early 2024. So it's a little bit more time for QDT to really show itself. But you can see it's been proving itself quite nice. And of course, you could say that QDTY had a rough start because it started just as the market started to tank. But, end of the day, they probably will be quite close to each other, but still, I prefer QDTE. And of course, we could also go ahead and close this down and take a look at the larger chart with all the funds that I've just mentioned. We can see QDTE 10%, XDTE 7%, YMAX 11.83%, and YMAG with 50.808, and this is actually SPY, not S&P 500. It's SPY ETF, and it's performed a little bit better than S&P 500 at 11.09%. So it did technically outpace QDTE on 1%. So if you held SPY rather than QDTE, you would have been up by 1% compared to QDTE. But that's because it's the SPY ETF and it pays dividends compared to S&P 500, which does not pay dividends. So now that we look at this, what is my total strategy after knowing why I chose QDTE? Well, like I said, I'm going to be putting roughly $500 to $1,000 starting off into my fund, into my portfolio, right? Taking margin when I need to, or taking margin out when I need to. Just taking margin out when I need to and spending on bills if I need to. If I have months where I did not spend as much and I'm able to cut costs, or it just didn't go out or anything of that sort, daily life expenses, I'm going to be able to keep that margin in the account and use it to continue to reinvest, right? So that margin technically will not just be going out and earning me no income, right? If I'm going out and paying bills, it's not earning me any income with that margin. So say I spend less, I'm incentivized to still spend less and use that margin to go ahead and put back in a portfolio and make income from that margin, right? Also, the margin will be not as strong, right? What I mean by that is I'm not going to be taking out 100% of what I put in. I'm going to try and take out maybe 75%, 50%, continuing to increase that margin buffer, especially being someone who runs options myself, right? The reason I also want to run this strategy and do this with my W-2 income is because, of course, I'm able to increase the amount of income I make, right? This is able to increase and compound faster than my W-2 income and the raises I get there. But also, I'm able to create more income in my account, create more buffer in my account, margin buffer in my account, which then allows me to trade my option strategies. Currently, my option strategies are limiting my margin buffer. I had to close a position. I'm not afraid to admit it. I had to close up my SPY covered calls that I have on my poor man covered call strategy. I had to close them at a loss. I had to pay a quite good sum of money and close it at a loss, and therefore that reduced my margin buffer, right? I was at 30%. It went down to 22%, right? It pretty much almost negative 10% my margin buffer. In those scenarios, I need option income to be able to increase that margin buffer. I also need that option income to bring me income when my option strategy cannot, right? Currently, where we stand in my portfolio, where I stand in my portfolio is I over leveraged into poor man covered call strategies instead of focusing on maybe having one contract but having more buffer, right, by owning QDTE with margin requirements of 25%, or YMAX or SPYI or JEBQ, right, owning those type of funds with known returns that we see over here on the graph, and increasing my margin buffer. And then when I'm able to afford to get another contract, I get another contract. I'll admit it. I made a mistake. I went a little bit too quick into that strategy, thinking it's going to be amazing. I want to make all the returns. I'm going to make all the income possible. And it is still a good income strategy, earning $400 a month, respectively, per contract. And it's a quite nice and safe position, of course, when markets are able to do it. Now, if you're like me and you get a little bit greedy on money, like I did last month in April, right? You get hurt. You get burned. Right, I chased that money on the way down when the market was going down, and when the market jumped back up because of news of pause or anything of that sorts, I got burnt. But it's okay. We keep going, right? I paid the money I had to pay. We're still profitable on the whole strategy in the end of when you're looking at the recent time. But I still need that buffer. And that's why I'm deciding to do this, and that's why I'm looking at people like Paycheck Portfolio who really pushed me to start doing this myself. I know there's a couple other YouTubers that run this strategy as well, and I've looked at their portfolios and I've looked at what they've done. They also have a large income amount that they earn from their W-2. Paycheck to Portfolio is actually a little bit similar to mine based on the information he's given. So looking at him and looking that he's able to achieve that with his paycheck, it kind of gives me a push to continue to do that with my paycheck as well, right? So we'll see how that strategy runs out. But just looking at the charts and looking at the returns from QDTE, for me, QDTE is the best position to run and the best thing to do, right? For me, this is the best way to increase my margin buffer, as well as diversify into other funds, and as well as to have money to go ahead and pay any paychecks I need to pay. So that is what I'm doing with QDTE. That's why I've chosen QDTE, because of the dividends that is received, right? We see the $15.24, as well as the strategy that they run, right? They run the 0DTE strategy on QQQ. They allow the nighttime market to move, right? As like I said before, statistically, averagely speaking, the market moves mostly at night, and therefore QDTE is able to capture with their 0DTE strategy. The reason why I'm picking Roundhill over YMAX like YMAX, YMAG, SDTY, QDTY is because YMAX ETF strategy with the 0DTE trades is a little bit more risky for my own self in my portfolio, and YMAX and YMAG is based on the single stock ETFs that they own. I already have their single stock ETFs like AMZ, Apple, GUI, Tesla, right? AMD, and I also have YMAX. I don't need more money into YMAX and YMAG if I already own their single stock ETFs as well as YMAX, right? So that's the reason why I'm going to continue going into QDTE. It has a good enough return for me. If I take 50% out and reinvest it back in QT, my yield will fall from 10 to 5%, but it's fine with me. I'm not chasing growth in the account when it comes to the value growth that I have. Of course, I have my leap contracts to do that, right? My leaps, if the S&P goes up, the leaps will capture that and it will grow my account. I'm looking to create more and more income, which will then speed up and compound the amount of growth that I have in my account, right? If you're getting 5% on 10,000 is a lot different than 5% on 20,000 or 5% on 100,000 or a million, right? 5% is a lot more the more money you have in your portfolio, right? And the only way to get more money in your portfolio is to have income generating assets that are able to be deposited back into your portfolio. You can have all the growth you want on your S&P shares, but if you don't sell, does it really count as income? Does it really count as gains, right? It's paper gains. It's not real until you sell and secure that income and that gain. But when you get dividends, it's secured income, secured gains that I could do anything with it. I could put it anywhere, do anything, pay any bill, reinvest into anything I want. Reinvest into SPY if I wanted to, right? 11.09% could capture some of that grain. And then if you get to 100 shares of SPY, right, you can sell covered calls on it and increase your income as well with that. So that has been me. That is why I am choosing QDTE to run the W-2 strategy. of taking my W-2, some of my W-2 income, putting into my portfolio, increasing my margin buffer, and also using the margin when I need to. If I don't, it gets reinvested back in and increases my income, and so on and on and on. And that's what we're looking to do in my portfolio. Thank you so much, everybody, for watching. Thank you so much for, of course, Paycheck to Portfolio for putting this idea out, for creating his channel, for putting the videos out, and kind of in pushing me to start doing this as well. Like I said before, I've seen it around with other YouTubers, but just never, took the step to actually do it. And seeing his returns and what he's been able to accomplish, actually, just allows me to, or pushes me to do it as well. So thank you so much for watching. I will see you guys next week for next week's video, which hopefully, actually, it's not going to be the end of the month yet. I was going to say we could go over how much we made for May, but the month has not ended. We have an extra week in May, technically, to farm more weekly income, as well as another payment from AMD that we're going to be receiving next week. So see you guys next week for whatever the video is next week. See ya.